Let's start with the basics. What is an ETF, and why should every modern investor care? In today's fast-evolving financial world, understanding the tools at your disposal is more important than ever. Whether you're a seasoned investor or just starting out, grasping the fundamentals of ETFs can open up a world of opportunity. So, what exactly is an ETF, and why does it matter for crypto? As digital assets become more mainstream, the intersection of traditional finance and cryptocurrency is creating new possibilities for investors everywhere. An exchange-traded fund, or ETF, is essentially a basket of assets. These could be stocks, commodities, bonds, or even cryptocurrencies, all bundled together and traded on stock exchanges, just like regular stocks. This means you can buy or sell shares of an ETF throughout the trading day, making it a flexible and accessible investment vehicle. The main advantage? Instant diversification. Instead of putting all your eggs in one basket, an ETF spreads your investment across a range of assets, reducing your risk and helping you weather market ups and downs. Buy one ETF, and you're exposed to an entire market sector or asset class. This makes it easier for investors to participate in broad market trends without having to pick individual winners and losers. ETFs combine the diversification of mutual funds with the flexibility and real-time trading of stocks, letting you buy and sell throughout the day at market prices. This unique blend of features has made ETFs a favorite among both individual and institutional investors. Now, imagine applying this concept to crypto. Instead of navigating the complexities of digital wallets, private keys, and multiple exchanges, a crypto ETF streamlines the process. With a crypto ETF, you can invest in digital assets through your regular brokerage account, just as you would with stocks or traditional ETFs. There's no need to worry about the technical side of crypto, no passwords to remember, no wallets to secure. This bridges the gap between traditional finance and the new world of crypto, making digital assets accessible to anyone with a brokerage account. It's a major step toward integrating crypto into the broader financial system. For investors curious about crypto but wary of the technical hurdles or security risks, ETFs offer a simple, regulated entry point. You get exposure to the potential growth of digital assets, all within a familiar and trusted investment framework. The excitement around crypto ETFs is about more than just convenience. It's about opening the door for mainstream money to flow into digital assets. This could mean greater liquidity, more stability, and increased acceptance of crypto in everyday portfolios. This shift has the potential to fundamentally reshape the investment landscape, bringing trillions of dollars from traditional finance into the world of crypto. As more investors gain access, the market could see unprecedented growth and innovation. The stage is set for a major transformation in how we invest in digital assets. For the modern investor, understanding ETFs, especially crypto ETFs, could be the key to unlocking the next era of financial opportunity. Until recently, getting a crypto ETF approved in the US was a slow, complex process. The journey was fraught with regulatory hurdles and endless paperwork, making it a daunting task for even the most seasoned asset managers. The SEC scrutinized every application, worried about market manipulation, custody, and liquidity. Each proposal was dissected meticulously, with regulators leaving no stone unturned in their quest to protect investors. Asset managers faced months of uncertainty, with approvals dragging on and only the biggest players able to compete. Smaller firms often found themselves sidelined, unable to navigate the complex regulatory landscape. This bottleneck meant only Bitcoin and Ethereum ETFs made it through, leaving thousands of other digital assets out in the cold. The focus on these two giants overshadowed the potential of other promising cryptocurrencies. The process stifled innovation and limited investor choice. Many innovative projects were left without a platform, unable to reach a broader audience due to the stringent regulations. Investors wanting exposure to coins like Solana or XRP had no regulated options. This lack of diversity in the market meant that investors were missing out on potentially lucrative opportunities. The SEC's cautious approach protected investors, but also kept the crypto ETF market small and exclusive. Only a select few could navigate the regulatory maze, leaving many out of the loop. It was clear. For the market to grow, the rules had to change. The existing framework was too restrictive, stifling innovation and limiting the market's potential. The SEC needed a new playbook to keep up with the pace of crypto innovation. adapting to the fast-evolving landscape was crucial for fostering a more inclusive and dynamic market. In September 2025, the SEC made a game-changing move that sent ripples through the financial world and the crypto industry alike. For years, the process of approving crypto ETFs was slow, unpredictable, and often mired in bureaucracy. But now, the SEC has taken a bold step. It streamlined the crypto ETF approval process, making it more efficient and transparent than ever before. No more case-by-case reviews. Now, there's a clear, rules-based system that everyone can understand and follow. This new approach removes much of the uncertainty that previously plagued applicants. Approval timelines have been slashed from a lengthy 270 days to as little as 75, dramatically accelerating the pace at which new products can reach the market. Asset managers can now respond quickly to market trends, bringing innovative new products to investors in months, not years. This agility is crucial in the fast-moving world of digital assets, where opportunities can appear and disappear in the blink of an eye. The SEC's new checklist means if a crypto ETF meets set criteria, it can move forward fast, without unnecessary delays or red tape. This checklist provides clarity and predictability for fund issuers. This shift is expected to unleash a wave of creativity and competition among fund issuers, as they race to develop new offerings and capture investor interest in a rapidly evolving market. Importantly, the SEC isn't abandoning investor protection. Instead, it's focusing on upfront standards for the underlying crypto asset, ensuring that only high-quality, secure products make it to market. If the foundation is solid and the criteria are met, the fund can launch with confidence, giving both issuers and investors greater peace of mind. This pragmatic approach signals growing institutional acceptance of crypto, as major players now have a clearer path to participate in this emerging asset class. The floodgates are open for a new era of crypto ETFs, promising more choice, greater access, and increased competition for investors of all sizes. The landscape for crypto investing in the US has changed permanently. With these reforms, the SEC has set the stage for a dynamic, innovative, and more inclusive financial future. So, what does it take for a crypto ETF to get fast-tracked? The SEC has 3 clear criteria. Meet anyone, and you're in. First, the cryptocurrency must trade on a regulated exchange, ensuring oversight and transparency. Second, if there are CFTC-regulated futures contracts for the coin trading for at least 6 months, that's another green light. Third, if an existing ETF holds at least 40% of its assets in the actual coin, similar funds can launch quickly. These rules favor established coins and create a domino effect for new ETF launches. Asset managers now have a concrete checklist, not a guessing game. This framework balances investor protection with broader access to digital assets. The industry finally has a roadmap, and it's about to be tested. With the new rules in place, the race is on to launch the next wave of crypto ETFs. Solana and XRP are the frontrunners, both meeting the SEC's new criteria. Solana's active futures market and XRP's regulatory clarity put them in the fast lane. Major asset managers like BlackRock, Fidelity, and VanEck are leading the charge, leveraging their experience from Bitcoin and Ethereum ETFs. Dozens of new altcoin ETF applications are already in the pipeline. The fourth quarter of 2025 could see a flood of new products, sparking fierce competition on fees, marketing, and trust. The challenge: how to stand out when multiple firms offer similar ETFs. This surge signals growing confidence in crypto as a mature, investable asset class. The next chapter of crypto ETFs is being written right now. Grayscale moved fast, launching the Grayscale CoinDesk Crypto 5 ETF just days after the new rules. Instead of starting from scratch, Grayscale converted an existing private fund into a public ETF, making it accessible to all investors. This ETF holds a basket of 5 coins: Bitcoin, Ethereum, XRP, Solana, and Cardano. It's the first diversified crypto ETF, offering broad exposure in a single product. Grayscale's quick action gives it a first-mover advantage and sets a new precedent for the industry. Expect more index-style and sector-focused crypto ETFs to follow. The market is shifting from single-asset funds to diversified products, mirroring traditional finance. Grayscale's move is just the beginning of a new era for crypto investing. For investors, this is a paradigm shift. More choice, greater access, and increased competition. Soon, you'll be able to invest in a wide range of digital assets, not just Bitcoin and Ethereum. More competition means lower fees and better products. The launch of new ETFs could drive up the value of underlying coins, just as Bitcoin ETFs did. Institutional involvement and SEC oversight add credibility and stability to the market. As crypto becomes more integrated into mainstream portfolios, volatility may decrease. This is a chance to get in early on the next wave of crypto growth. The ETF boom will bring maturity and trust to the digital asset space. The door to crypto investing has never been more open. But with opportunity comes risk. Investors must tread carefully. The rush to launch new ETFs means less time for education about complex coins. Not every new ETF will succeed. Some may struggle to attract assets and could close. Even in an ETF, crypto remains volatile and speculative. The risks of hacks, competition, and regulatory changes don't disappear. Don't get swept up in hype. Do your own research, read the prospectus, and understand what you're buying. Diversification and caution are key. The SEC has made access easier, but responsibility still lies with the investor. The floodgates are open, but wise navigation is essential. The SEC's streamlined rules mark a turning point for crypto investing. A permanent bridge now connects traditional finance and digital assets. Expect a rapid evolution from single-asset ETFs to diversified and actively managed crypto funds. Investors will have more tools than ever, but also more complexity. Education and diligence are crucial. Not all coins are created equal. Research the underlying asset, its use case, and its risks before investing. The institutionalization of crypto is unlocking trillions in capital and fueling innovation. The future of finance is digital, and the opportunities are vast for those prepared. Volatility remains, but the direction is clear. This is just the beginning. Crypto's next chapter is unfolding now.